All right, when we talk about investing, our minds usually go straight to buying stocks on an exchange. But what if we flipped that around? What if you could invest in the exchange itself? The actual pavement of the financial superhighway where trillions of dollars are zipping around every single day. We're going to dive into this because the companies that own these markets are probably not what you imagine at all.
So let's just start with a quick pop quiz. When you think of the biggest, most famous stock markets on the planet, what's the first name that pops into your head as the company that owns them?
You're probably thinking of the New York Stock Exchange, right? And you'd be spot on. That iconic trading floor is operated by a company called Intercontinental Exchange, or ICE for short. And get this, between them and Nasdaq, they control about 60% of the entire global stock market. That is a huge slice of the pie. Okay, but here's the twist. And if you're looking at this from an investor's point of view, this is where it gets really, really interesting. The company that runs the biggest market isn't actually the most valuable one. Bigger doesn't mean better in this case. So, who's the real king of the hill? Believe it or not, it's a company called CME Group. And here's the crazy part. Their main game isn't even stocks. Nope, they are the world's heavyweight champion of derivatives. Things like futures and options that farmers, airlines, and big corporations use to manage their financial risk. This little disconnect, well, it's the key to understanding this entire business. And this chart just lays it all out, doesn't it? I mean, look at those numbers. The stock market values CME Group at almost $98 billion. That's more than ICE, the owner of the NYSE. So what does this tell us? It tells us that investors, Wall Street, are betting big on a business model that's all about risk management, not just trading stocks. The big question is, why? Okay, so let's break it down. The very first piece of the puzzle is realizing that these aren't just your grandfather's stock exchanges anymore. They've evolved way beyond being simple places to buy and sell. Here's the bottom line. An exchange's real value today isn't just about how many trades are flying back and forth. It's about owning the pipes, the essential technology that makes it all work. And most important of all, it's about owning the incredibly valuable river of data that flows through those pipes. All right, next up, let's talk about defense. These companies have built some of the most impressive financial fortresses you will ever see. They are just incredibly tough for competitors to attack. You've probably heard this term before, especially if you follow Warren Buffett. It's called an economic moat. It's just a fancy way of saying a company has a powerful, long-lasting advantage that keeps rivals away. And let me tell you, the moats around these exchanges are, well, they're more like giant oceans. So how do they build this moat? Well, it rests on 4 giant pillars. The biggest one is the network effect. It's a classic case of everyone's here, so I need to be here too. Liquidity brings in more liquidity. Then you've got massive regulatory roadblocks, eye-watering technology costs, and literally centuries of brand recognition and trust. Just try building a new NYSE from your garage. Yeah, good luck with that. Now we get to the absolute heart of the matter. This is the single most important change happening in this industry. And if you're an investor, this is the core of the whole story. Think about it like this. The old way of making money was kind of shaky. You'd get a tiny fee from every trade, so your income went up and down with the market's mood swings. The new model? Oh, it's so much smarter. It's built on selling data and analytics through stable, recurring subscriptions. So which would you rather bet on? Wildly unpredictable fees or a steady, predictable river of cash? It's a no-brainer, right? And if you want to see this in action, look no further than the London Stock Exchange Group. They went out and made this enormous, game-changing $27 billion acquisition of a data company called Refinitiv, and boom, their business was transformed overnight. I mean, look at that. A whopping 70% of their money now comes from data. They're not a stock exchange that sells data. They're a data company that happens to run an exchange. So it's super important to remember that not all these companies are cut from the same cloth. Each one of the big players has its own flavor, its own unique strategy. And for an investor, that means each one is a different kind of bet. This table is the perfect cheat sheet. You've got CME, the undisputed king of derivatives. You've got LSEG, the data monster we just talked about. Nasdaq has cleverly turned itself into a tech company, selling software to other financial firms. And then there's Hong Kong exchanges, which is really a pure play bet on being the main gateway for investing into China. But hang on. It can't all be sunshine and roses, right? Of course not. There are definitely some real risks here.
some clouds on the horizon that you really need to know about before you jump in. The big boogeyman in this space is something called dark pools. Sounds kind of mysterious, right? But really, all they are private trading venues for huge institutions, letting them trade massive blocks of stock without tipping off the rest of the market.
And don't underestimate this threat. We are talking about a huge chunk of the action. Sometimes more than half of all the stock trading in the US happens off the main stage, away from the NYSE or Nasdaq. That's a ton of trading fees the public exchanges are missing out on.
But, and this is a huge but, there's a catch. Dark pools can't just make up prices. They're basically parasites. They need a host to survive. And that host is the public lit exchanges, where prices are actually discovered. So in a very weird way, even though they steal trading volume, they actually prove just how essential the public exchanges, and more importantly, their data, really are.
So let's wrap this all up. What are the big takeaways if you're looking at this as an investor? First, it's all about the massive shift from shaky transaction fees to stable recurring data revenue. Second, those powerful economic moats, they are for real and they're not going anywhere. Third, you can choose your strategy. You can bet on derivatives, data, technology, or pure geography. And finally, the future growth here isn't about more trading. It is all about data, data, and more data.
So I'll leave you with this final question. We hear it all the time, right? Data is the new oil. Well, if that's true, doesn't that make these exchanges, the absolute gatekeepers of all financial data, the ultimate toll booth operators on the global economic superhighway? Definitely something to think about.